Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. This is our 534th installment of this program, traders. We are filming to you live tonight on January 12th. We're trading January 13th. That is Wednesday, 2010. Right off the bat, I'd like to say we have a red Omni, almost a green. We have a red Omni on the board. I should clap, right? We don't want to clap for red Omnis. Let's break that clapping up. All right, we have a red Omni, traders, but I will say this right now, do not fall in love with the downside. Do not fall in love with the downside. Little peck on the cheek tonight. You know, we're going to let it come down a little bit. Here's what I'm expecting. Usually you'll get like 2 big down days in what's a bull market before buyers come back in. Tuesday we had a big down day. Wednesday we should get another, but I will say this. Red Omni or not, traders, I'm going to be very nimble being short a bull market. So yes, we have a trade set up for the NASDAQ and the S&P for the downside, but you better believe I'm going to be nimble. I'm going to get in, I'm going to get out, and then I'm going to wait and see what happens next because I prefer to be buying dips in a bull market and not having to sell. But when the market sets up technically, it sets up technically. There is nothing I can do except for call the trade. Speaking of which, yesterday we traded the euro currency and the sugar. Great euro currency trade only to be clobbered by the sugar. It was a good technical setup, but it did not work. So we'll call Tuesday a loser because it depends on if you took one or both. The ones who just took euro currency, hooray for you. The ones who took sugar and currency, sorry, but it wasn't so bad. The ones who took just sugar, hey man, I'm crying with you, I'm sorry. But keep your dukes up. It's only Wednesday, baby. We've got a long way to go this week. Traders, ECB meeting starts tomorrow. ECB meeting, and that means hands off currencies because they will make some sort of an announcement by Thursday. I don't want to touch the currencies for the next couple of days. We will stand aside and let them do their thing. So, indices are in a pullback, and I will illustrate that to you in a chart in just a moment. ECB meeting starts. That means hands off the currencies for now. Traders, let's go look at some charts of the indices. Okay, traders, what you are looking at is the Dow Jones Industrial Average daily bar chart, which lately has been showing more leadership than the NASDAQ. Very interesting. I don't know how long that will last, but for now, the S&P and the Dow Jones Industrial Average have been showing a little more leadership than the NASDAQ, and I think it's because there's been a rotation out of high-tech stocks and into a lot of brick and mortar, and I think that's what we've seen. I've said this to you in the last few videos. You can see it because we had a nice strong up day on Monday in the Dow Jones Industrial Average. Today, I should say, well, tonight we're filming the video for tomorrow, Wednesday. On Tuesday, we had a bit of a pullback. First day of a bit of a pullback, not a huge down day, but certainly a down day, and it looks like it's probably going to pull back a little bit more. But I say do not fall in love with the downside because what you'll recognize in a moment is that there is a very nice parallel channel, and that channel is right here. There it is right there before your eyes. We're in a parallel channel. Yes, we could get another pullback here, so maybe it'll pull back into the parallel channel, test this support. Don't fall in love with the downside, but as day traders, we can take that little elevator ride down, jump out, step to the side, and let this thing do what it wants to do before we buy it once again. At least that's my plan. So you see that we are in a parallel channel. Unless we settle for 2 days below this channel, I would say that we'll probably bounce off the bottom of it and head right back up. We'll take it one day at a time. Technical indicators, by the way, would have you believe that this market does want to go down. So I'll show you a couple of more charts with their technical indicators. Okay, traders, what you're looking at right now is the S&P daily bar chart. And as you can see, yes, we're in a parallel channel illustrated by these 2 big blue lines. And yes, this was resistance, and we went up and tested it. It now became support, and we rallied. But it looks like we're going to be in for one of those 2-day pullbacks in a bull market. We have a bull market. It was right here on Monday. Tuesday, it dropped. First down day, the S&P showed. Probably Wednesday, it drops again down here somewhere, and then we'll look to cover and get out of the market's way. So we are looking for a second down day in a bull market. So once we get short, we're going to bail out, we're going to be very nimble, and then we're going to start looking for another buy area, unless, of course, we begin to break down. Then we'll let the markets tell us what to do. Now, you see the formations are there for our market to pull back. Now let's go look and see if technical indicators agree that, yes, there could be a two-day pullback coming. Okay, traders, for the S&P daily bar chart, you are looking at the commodity channel index right here, circled in red. You can see we are pointing down, so that indicator sure does complete, or at least give us part of the puzzle to complete this picture. Then we are looking at RSI. That is certainly pointing lower right now, expecting us to move lower for at least another day. And then here we have slow stochastics. Check mark once again. That is pointing down. Percent K and percent D have crossed right here. So you'd have to expect some kind of a pullback. We had a down day today, making it down day 1 on Tuesday. Let's look for our second down day on Wednesday, and then we'll go from there. So those are the technical indicators for the S&P. Of course, we look at many other charts to decide whether or not we think we're bullish or bearish. So let's look at just a couple more here. Okay, traders, now you are looking at the NASDAQ daily bar chart. Same chart I showed you in our last video just 2 evenings ago. We had resistance. This red line represents it. We hit it and broke, ran up, hit it and broke, ran up, hit it and broke. Well, then we got above it and came back and hit it and held, and came back and hit it and held. But as of Tuesday, the market went lower than the support line and settled right there, just below or at that support line. So that could probably give us one more drop. But again, traders, we are in a strong parallel channel in a bull market. So we're going to be very nimble if we take this short trade. We will get short, we will get out, and then we will look for a spot where support begins to hold, expecting more upside probably before the week is over. But again, we'll take this one day at a time. Now I'd like to show you what the indicators on the NASDAQ look like. Okay, traders, using the NASDAQ, now we have some technical indicators, the same 3 we showed you for the S&P chart. CCI, clearly bearish. The RSI, Relative Strength Index, clearly bearish. Slow stochastics clearly now have turned down. They are no longer pinned up here, and they're actually pointing lower, so we'll have to let that tell us what's coming next. For now, I say that's bearish, so let's go with the short side for Wednesday's trading. One more chart, traders. Okay, traders, the last chart I'm showing you here is the Mini Russell. This is the Mini Russell 2000 March bar chart. It's the daily bar. And again, I showed this to you in our last video. It had a bull flag, broke out of the bull flag into a very nice parallel channel towards the upside. But look where the market resides as of Tuesday's closing. Below the channel, close below the channel. Likelihood of getting another down day, I think, is there. Again, be nimble, get in, get out, and expect some sort of this type of action by Friday. Again, though, we are day traders, and we take this one day at a time. There is your technical picture, traders. Pull your own charts, pull your own graphs. Always do your own homework before taking anybody's recommendation. So, traders, you see the charts. There's your technical picture. There's my argument for seeing at least one more pullback day. But again, traders, don't fall in love with the upside no matter what you... Did you hear that?
I heard it.
Did you hear that? Oscar, don't say those words. Don't fall in love with the downside no matter what you do here, because listen, we've been in a bull market for quite some time. Likelihood is we're going to stay in it. Yes, every bull market has pullbacks, and we're day traders, so we can play those pullbacks, but we are not going to fall in love with this market. Again, little peck on the cheek, kiss it goodnight, and go home. Then we'll look for the upside once again. All right, traders, so there it is. Make sure you come on down to our site. It's www.livewithoscar.com. Jump into the free chat rooms. Allow us to help you. Allow this community of traders here, these omniacs, to help you not to trade alone. There's a lot of us in these chat rooms. It's not just me, traders. There's help from all of us, because collectively as a group, we try to get through these rough and tumble markets every day. And there's a lot of good traders in these rooms that hang out with us every day. So come join us. All right, traders, I'm getting out of here. Give us calling time day or night, 702-629-4755. And as always, keep your emotions out of trading. One of the best things you can do is to say this to yourselves every morning, every afternoon, every evening. And you know what that is? Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.